Welcome to Money Masterminds. In today's video, we're diving into the basics of investing and why it's crucial. We'll explore key concepts like stocks, bonds, and mutual funds, helping you build a diversified portfolio. Stick around to take control of your financial journey. Understanding stocks. Stocks represent ownership in a company, allowing investors to buy a share of its future profits and growth. When you purchase stocks, you essentially become a part owner of that company, which can be an exciting opportunity. Stocks play a crucial role in the investment landscape, offering the potential for significant growth over time. However, it's important to recognize that investing in stocks also comes with risks, including market volatility and the possibility of losing your investment. For example, companies like Apple and Amazon have historically shown impressive performance, with their stock prices soaring over the years. These stocks have attracted many investors due to their strong fundamentals and innovative business models. However, it's essential to conduct thorough research and consider both the potential rewards and risks before diving into stock investments. Understanding how stocks function will empower you to make informed decisions in your investment journey. Exploring bonds. Bonds are often considered a safer investment option compared to stocks, serving as loans made by investors to governments or corporations. When you purchase a bond, you are essentially lending money to the issuer in exchange for periodic interest payments and the return of the bond's face value upon maturity. This structure provides a level of predictability that many investors find appealing. One of the primary benefits of bonds is the fixed interest payments, which can offer a steady income stream, making them an attractive choice for conservative investors. Additionally, bonds tend to be less volatile than stocks, providing a cushion during market downturns. There are various types of bonds, including government bonds, which are backed by the government and considered low risk, and corporate bonds, issued by companies that may offer higher yields but come with increased risk. Understanding bonds can help diversify your investment portfolio and balance risk. Mutual funds. Mutual funds are investment vehicles that pool money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other securities. This collective approach allows individual investors to access a broader range of investments than they might be able to afford on their own. For beginner investors, mutual funds offer a convenient way to enter the market without needing extensive knowledge or experience. One of the key advantages of investing in mutual funds is diversification. By spreading investments across various assets, mutual funds help reduce risk, as poor performance in one area can be offset by gains in another. Popular mutual funds, such as the Vanguard Total Stock Market Index Fund and Fidelity Contra Fund, have demonstrated strong historical performance, making them appealing options for new investors. Overall, mutual funds provide a manageable and effective way to build wealth while minimizing risk, making them an excellent choice for those just starting their investment journey. The power of compound interest is often referred to as the eighth wonder of the world because of its remarkable ability to grow investments over time. Unlike simple interest, which is calculated only on the initial principal, compound interest is calculated on both the principal and the accumulated interest from previous periods. This means that your money can earn interest on interest, leading to exponential growth. For example, if you invest $1,000 at an annual interest rate of 5%, after 30 years, you could have over $4,300, thanks to the power of compounding. This illustrates how even modest investments can grow significantly over time. To truly harness the benefits of compound interest, it's crucial to start investing early. The sooner you begin, the more time your money has to compound, maximizing your potential returns. So, don't wait. Take the first step in your investment journey today and watch your wealth grow. Diversification is a key investment strategy that involves spreading your investments across various asset classes to reduce risk. By not putting all your eggs in one basket, you can protect your portfolio from significant losses if one investment underperforms. Diversification helps balance your portfolio by combining different types of assets, such as stocks, bonds, and real estate, each reacting differently to market conditions. To effectively diversify, consider including a mix of asset classes that align with your risk tolerance and investment goals. For example, you might allocate a portion of your funds to stocks for growth, while also investing in bonds for stability. If you have limited funds, you can still diversify by investing in low-cost index funds or exchange-traded funds, ETFs, that provide exposure to a broad range of securities. This approach allows you to achieve diversification without needing a large amount of capital, making it accessible for all investors. Starting your investment journey with limited funds is entirely possible and can be a rewarding experience. First, it's essential to create a budget and set clear investment goals. Determine how much you can comfortably invest each month and what you hope to achieve, whether it's saving for retirement, a home, or simply growing your wealth. Next, consider using investment platforms that allow for fractional investing or have low minimum investment requirements. Apps like Robinhood Acorns and Stash enable you to buy fractions of shares, making it easier to diversify your portfolio even with small amounts. For beginners, simple investment strategies like dollar-cost averaging can be effective. This approach involves consistently investing a fixed amount over time, regardless of market conditions, which can help reduce the impact of volatility. By taking these actionable steps, you can confidently start investing and build a solid financial foundation for your future. In this video, we've covered the essentials of investing, including the basics of stocks, bonds, and mutual funds, as well as the critical importance of diversification in managing risk. We also highlighted the power of compound interest and how it can significantly grow your wealth over time, making early investment a smart choice for your financial future. Remember, understanding these concepts is the first step toward building a successful investment strategy. If you found this information helpful, we encourage you to subscribe to our channel for more financial content. Don't forget to like this video and share it with friends or family who might also benefit from learning about investing. Your engagement helps us create more valuable resources to guide you on your financial journey. Thank you for watching, and we look forward to seeing you in our next video.